After months of unpredictable declines and chaotic price action, Shiba Inu's chart just became clear. A series of higher lows has formed on the daily time frame. A rising trend line has been tested multiple times and held every single time. And what is now building is not a bounce. It is a base. What is happening and what on earth am I even talking about? Well, let me explain. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. An analysis published on April 25, 2026 just delivered one of the most significant and readable chart observations the Shiba Inu community has received in months. Following the chaotic period of sustained downtrends, random bounces, and competing narratives that define most of the first quarter of 2026, the daily chart has shifted into a structure that technical analysts can actually interpret with clarity. The pattern forming right now is controlled, deliberate, and identifiable. And the community needs to understand exactly what it means and what it does not mean before making any decisions based on it. Now here is where it gets interesting. Look at the Shib chart right now. According to reports, following months of producing consistent lower highs and lower lows, a pattern that confirms sellers were systematically in control at every price level, the Shib daily chart has produced a structural change that analysts are highlighting as the most meaningful development in the token's technical picture in months. The price is no longer printing lower lows. Instead, each successive dip is being bought slightly higher than the dip that preceded it. That sequential behavior, where the next low point is established at a higher price than the previous low point, is the definition of a higher low series. Market observers say higher lows, when they appear on a daily chart after an extended downtrend, carry a specific and well-documented interpretation. They indicate that buyers who were previously allowing price to fall to progressively lower prices before stepping in have now started stepping in earlier. They are no longer waiting for a new low. They are entering at prices above the previous lows. That behavioral shift communicates that the floor is gradually migrating upward. And here is what makes this higher low sequence technically significant beyond the raw observation that lows are rising. Connecting those successive higher lows across the daily chart produces a rising trend line, a diagonal support line that has been tested multiple times as price dipped toward it and held every time. According to reports, a trend line that has been tested and held multiple times is not the same as a trend line drawn through two random points. Each successful test of the line adds confirmation weight to its validity as a support structure. Each bounce from the line represents another documented instance of buyers entering the market at exactly that price zone and preventing further decline. The analysis published today describes this structure as a controlled accumulation formation rather than a random bounce sequence. Analysts note that random bounces produce inconsistent lows and irregular trend lines that break easily. Controlled accumulation produces the specific pattern of consistently higher lows and a trend line that holds under pressure because the buying conviction behind it is structural rather than speculative. But here's the kicker. The higher low structure and the rising trend line are only one side of the technical picture. According to reports, simultaneously, while the ascending support trend line has been forming below price, the resistance zone above the current price level has been declining or holding flat. That creates a very specific and analytically important market structure. Ascending support is compressing upward toward horizontal or slightly descending resistance. The gap between where sellers are stopping the rally and where buyers are entering the market is getting smaller with every session. Industry watchers note this is the pattern analysts describe as a coiling structure. The market is not trending in either direction. It is coiling. And coiling structures, when the compression has been building for an extended duration, are the exact setups that precede explosive expansion events. The direction of that expansion depends on which level breaks first, but the coil itself is real, the compression is documented, and the potential energy building inside it is measurable. Now, here is what the volume behavior adds to this analysis. According to reports, trading volume on Shib has stabilized at lower levels after the activity spikes that accompanied earlier price events in April. That volume behavior is confirmatory of the accumulation interpretation rather than a warning sign. Volume typically decreases before a decisive directional move because participants on both sides hold their positions rather than aggressively trading against each other. What the analysis specifically identifies as more significant than the presence of aggressive buying volume is the complete absence of panic selling. There are no capitulation candles in the current structure. There are no dramatic drops below the trend line. The analysis frames this directly. According to market observers, the absence of panic selling is more analytically significant here than the absence of aggressive buying. Here is what the momentum data adds to the chart interpretation on April 25. According to reports, the RSI for SHIB on the daily chart is sitting in the neutral to slightly bullish range, confirming equilibrium rather than clear dominance by either side of the market. This RSI reading is precisely consistent with the coiling structure analysis the article identifies as the defining technical feature of this period. A market in genuine accumulation does not typically show an RSI screaming overbought or deeply oversold at extremes. It shows a momentum oscillator hovering near equilibrium, gradually and quietly rebuilding bias in one direction without dramatic swings that would signal speculative excess in either direction. Analysts note momentum is rebuilding gradually rather than rapidly, and the gradual nature of that rebuild is not a weakness in the formation. It is evidence that the accumulation is structural and patient rather than speculative and impulsive. Patient and deliberate accumulation structures have historically produced the most sustained and powerful directional moves when they eventually reach their resolution point and break. And here is the honest constraint the analysis does not allow the community to overlook. According to reports, SHIB is still trading below the 100 period and 200 period exponential moving averages on the daily chart. Those long-term moving averages are still declining and acting as overhead resistance that any upside expansion must work through before a confirmed macro trend reversal can be declared. The analysis is precise on this point. What is happening right now is base formation, not a breakout, not a trend reversal, a base. Market observers note the price is building the foundation from which a breakout could eventually launch. The base can fail, the trend line can break. The resistance from declining EM as can absorb any breakout attempt that arrives without sufficient volume. The community is watching for the base to hold long enough and compress tightly enough that when the eventual directional move arrives, it carries enough accumulated pressure to work through that overhead resistance. And here's what the community holds alongside this technical analysis on April 25, 2026. According to reports, over 41% of the original supply has been permanently destroyed. Shibarium is live. The lead ambassador confirmed a Saturday session. The burn rate spiked 405% this week. And now, the daily chart is producing a controlled accumulation structure with a tested rising trend line and a series of confirmed higher lows for the first time in months. The infrastructure is intact and the ecosystem is still building. According to community sources, the chart is becoming readable for the first time in months. The coil is tightening with each session. And the community is actively positioning for whichever direction the eventual expansion chooses to resolve when it arrives. Drop your technical read in the comments below. Do you see the higher low series and rising trend line as the genuine foundation of an upcoming breakout? Or do you believe the declining 100 and 200 EM as overhead represent resistance that the current structure cannot overcome? Click on one of the videos on screen right now because the next chart development is building fast. Turn on the notifications bell because the moment the coiling structure breaks in either direction could be one of the fastest and most decisive price moves SHIB produces in this cycle. And share this video with every SHIB holder you know because the chart just became clear and this is the moment to understand what it is saying.